Welcome back to BitcoinDorks, your daily source for the latest and most important updates in the cryptocurrency world. Today, we're diving into a fascinating development involving one of the giants of the traditional finance world, Morgan Stanley, and their evolving relationship with Bitcoin. Specifically, we're going to explore Morgan Stanley's Bitcoin ETF position and what it could mean for the broader crypto market. So, let's get right into it. Morgan Stanley, a name synonymous with high finance and global banking, has been making significant strides into the cryptocurrency space. Their involvement has not only signaled a shift in traditional finance attitudes towards digital currencies but has also sparked a lot of interest and speculation about the future of Bitcoin and other cryptocurrencies. Recently, Morgan Stanley's position regarding a Bitcoin exchange-traded fund, or ETF, has come under scrutiny, revealing some intriguing insights. An ETF is a type of investment fund and exchange-traded product, meaning it is traded on stock exchanges much like stocks. ETFs are designed to track the price of a specific asset or group of assets. In this case, a Bitcoin ETF would aim to track the price of Bitcoin. The idea is to provide investors with exposure to Bitcoin without the need to directly purchase and hold the digital currency themselves. This could be particularly appealing to institutional investors or those who are wary of the technical aspects of handling cryptocurrencies. Morgan Stanley's interest in Bitcoin ETFs is significant for several reasons. First, it demonstrates the growing acceptance of Bitcoin as a legitimate asset class within mainstream financial circles. For a long time, Bitcoin and other cryptocurrencies were viewed with skepticism by traditional financial institutions. However, the increasing involvement of major players like Morgan Stanley suggests a shift in perception. This growing acceptance could pave the way for more widespread adoption and integration of cryptocurrencies into the global financial system. Moreover, Morgan Stanley's position on Bitcoin ETFs is particularly noteworthy given the complex and evolving regulatory landscape surrounding cryptocurrencies. The approval of a Bitcoin ETF by financial regulators, such as the Securities and Exchange Commission, SEC, in the United States, has been a topic of intense debate and anticipation for several years. This is not a new development. In fact, the journey toward getting a Bitcoin ETF approved has been fraught with numerous challenges and setbacks. Several attempts to launch a Bitcoin ETF have been made over the years by various financial institutions and investment firms, each one hoping to be the first to bring this innovative financial product to market. However, these attempts have consistently been met with resistance from regulators. The primary concerns cited by regulators like the SEC revolve around issues of market manipulation, liquidity, and investor protection. Market manipulation is a significant worry because the cryptocurrency market is still relatively young and can be more susceptible to price swings driven by large trades or coordinated efforts by bad actors. Regulators fear that without stringent oversight and safeguards, a Bitcoin ETF could become a tool for market manipulation, which could harm investors and undermine the integrity of the financial markets. Liquidity is another major concern. For a Bitcoin ETF to function effectively, there needs to be sufficient liquidity in the underlying Bitcoin market to handle the buying and selling pressures that the ETF would generate. Regulators are wary that the existing cryptocurrency exchanges may not have the necessary liquidity to support a large influx of institutional and retail investors through an ETF. This could lead to significant price volatility, which could, in turn, create a risky environment for investors. However, Morgan Stanley's involvement could signal a turning point. As a well-established and respected financial institution, Morgan Stanley brings a level of credibility and legitimacy that could help address some of the regulatory concerns. Their expertise in navigating complex regulatory environments and their extensive resources could play a crucial role in advancing the case for a Bitcoin ETF. The introduction of a Bitcoin ETF could have a ripple effect across the cryptocurrency market. It could spur the development and approval of other cryptocurrency ETFs, leading to greater diversity and maturity within the market. This could attract even more institutional investors, further driving the growth and acceptance of digital assets. Morgan Stanley's actions are also reflective of a broader trend among financial institutions. Many banks and investment firms are exploring ways to incorporate cryptocurrencies into their offerings. This includes not only ETFs but also custody services, trading platforms, and advisory services. The entry of major financial players into the crypto space is likely to accelerate innovation and development, as well as bring greater stability and security to the market. The potential benefits of a Bitcoin ETF extend beyond just the financial markets. It could also have broader economic and societal implications. For instance, increased investment in Bitcoin and other cryptocurrencies could drive technological advancements and infrastructure development. This, in turn, could create new opportunities for businesses and entrepreneurs, fostering economic growth and innovation. The growing acceptance and integration of cryptocurrencies into the financial system could also enhance financial inclusion. Cryptocurrencies have the potential to provide access to financial services for unbanked and underbanked populations, particularly in developing countries. By facilitating easier and more secure transactions, cryptocurrencies could help bridge the gap between traditional financial services and those who are currently excluded from them. In conclusion, Morgan Stanley's position on a Bitcoin ETF is a significant development that could have far-reaching implications for the cryptocurrency market. It reflects the growing acceptance and integration of digital assets into the mainstream financial system and could pave the way for greater adoption and innovation. However, it is also a complex and evolving landscape, with regulatory, security, and environmental challenges to address. As always, it is important to stay informed and approach these developments with a thoughtful and balanced perspective. That's all for today's deep dive into Morgan Stanley's Bitcoin ETF position. If you found this video insightful, please give it a thumbs up, share it with your fellow crypto enthusiasts, and don't forget to subscribe to BitcoinDorks for your daily dose of cryptocurrency news and analysis. Thank you for watching, and until next time, stay safe and keep hodling.